Michelle Gibley joins me, Director of International Research at Charles Schwab. We've been so locked in on inflation and AI and stuff today. Michelle, tell us about what's going on around the world and how we're setting up for next week, as they don't get the same holiday as us, of course.
Right. So next week, we'll get the Tankan measure in Japan. It's a measure of business sentiment. Eurozone CPI, China's PMIs, and then, of course, we'll get the elections in France and the UK. If we're thinking about inflation, the Eurozone CPI, the consensus for is a slight downtick. And today we had several countries post their inflation figures preliminary for June. Spain posted an uptick. Italy, inflation eased, and France was just 0.1% up month over month. But, voters are kind of tired of inflation, and they're making it known at the polls.
Does that have something to do with what's going on in France? And, that doesn't sound like a big inflation number, but when things are as tense as they are, anybody can spin things a certain way.
Yeah, I mean, that's just for the month of June, right? We've had a big increase in inflation cumulatively since the pandemic, and that's a global phenomenon. The French election will get two rounds. The first one is this Sunday. The second Sunday in July 7th, that will be the second round. Now, Macron's party is expected to lose control over parliament, and that governs domestic issues, but he could still stay in power presiding over foreign issues. They call that cohabitation. It doesn't seem totally optimal, but that's how it works. All parties are campaigning on increased spending, and that's really what the, what bond markets didn't like. Markets, though, could force prudence, as we saw in the UK with Liz Truss, and those plans were quickly reversed in 2022. And it's important really to look at the yield, the spread widening between the French and German bond yields, and put it into some context. It's a 31 basis point increase, but half of that is because French yields are up and half is because German yields are down 15 basis points. And after this is all over, we could just have gridlock in Parliament, making any ambitious laws passing probably unlikely, and we could see a sigh of relief in markets.
Well, judging by today's action, there's no real reason to think our election is necessarily going to be a price-positive event. I mean, it could be, it could not be, right? But it doesn't seem like there's any real conviction around that. If Europe is getting their political tension out of the way early, if they've gotten their monetary support kick-started earlier, is that setting up for a still good international trade, maybe one that can get ahead of the U.S. a little bit more?
Yeah, it's interesting. Europe is coming out of both an economic and earnings recession. And if we look to the second half of the year, earnings growth for the stock 600 in Europe could overtake the S&P 500. And meanwhile, European stocks are really attractively valued. They're just 13 times forward PE. That's below the 10-year average. And, if investors are just focused on the U.S., they're likely overweight the tech sector, and it might be a good time to diversify because tech doesn't always outperform.
Okay. And thinking right now about the kind of U.S. relative impact, dollar's basically been stable, and it seems like we still, from the Fed perspective, we're not going to get ahead in a big way. But do we know if they're going to, these other central banks, push even lower? Michelle, as kind of last thought, because we were talking this week, some of the Fed speakers, about would we do one and done? Would we be the beginning of a cycle? Do we have any further clarity on the other central banks if it will be a cycle?
Yeah, I mean, it's probably going to be a cycle, but maybe not at every meeting. The ECB cut rates for the first time at its last meeting. They're likely on hold in July. Lagarde said that inflation is bumpy. And so, it's not going in a straight line down at this point. So we could see, cuts at certain meetings and pause at the next. The Bank of England stayed on pause at its last meeting, but they could cut at its next meeting because inflation has come down. But, and then, of course, the Bank of Japan is always the outlier. They're hoping to raise rates and, as they escape from deflation.
Hopes and dreams. All right. Thanks, Michelle. As always, have a great weekend.
Thank you.